Today is Tuesday, February 2nd, and this is a post-market analysis. The stock market activities today. We are doing things differently because, as I announced in my Twitter page, I do have the plumber over at my house. We're doing some work, so we're going to be a little late, and we'll keep it short and sweet because of that. But the moral of the story is when your plumber starts asking you about GameStop stock, that is probably a good signal that we are getting to the end of the mania. There's a lot that I wanted to talk about today, specifically all the pumpers who've been egging on retail investors to stick it to the suits, invest in GameStop and AMC, etc. Of course, today we saw the slaughter. It was an absolute massacre across the board. We're talking about GameStop stock down 60% today, in addition to the 30% it lost last session. I'm talking, of course, about Mark Cuban, who I respect and admire and look up to. However, he has embarrassed himself since this whole thing started. He's been egging on retail investors to participate in this stupidity, saying that he love what's going on with Wall Street bets, stick it to the suits, stick it to the hedge funds. And of course, we all know why he and others are doing that. When they started companies in the public market, they got shorted by hedge funds. And they have this old beef with the hedge funds, and now they found an army of retail investors to do the revenge job. The problem is that these billionaires are not putting their money where their mouth is. They egged retail investors to take massive risk, very uneducated risk. And now we're seeing stories, unlike a week ago when we were hearing about people paying their student loans and their mortgages, etc. Now we're hearing about stories, horror stories of people who lost their life savings, who took loans on margin to buy the stock, and now they owe the broker a lot of money. Who's going to save the retail investor now? Are these billionaires going to bail them out? Of course not. And Mark Cuban went on CNBC today and made a complete asshat out of himself. And of course, he's trying to weasel himself out of this situation because he's being asked, wait a minute, you've been egging on retail investors to participate in this thing, and now all of a sudden you're saying that you hedged the heck out of your portfolio. What are you talking about here? And he's like, no, I did not change my mind, and the stock market is changing. It's not about fundamentals and valuations and financials anymore. It's all about momentum and supply and demand. Really, Mark? Are you that stupid? And then the anchor over at CNBC asked him, embarrassed the hell out of him, and told him, but wait a minute, Mark, on Shark Tank, when somebody asks for your money to invest in their businesses, the first thing you ask for is their financials. What are you talking about here? He's like, oh, but this time is different. Right? The guy made a complete asshat out of himself, and it's embarrassing because Mark Cuban is usually a very smart guy, a very rational guy, but this is what happens when you open your mouth before you think it over. And then he goes on saying that, oh yeah, Robinhood restricting trades, but Fidelity isn't. Of course it isn't. Fidelity is the largest shareholder in GameStop. And you bet that Fidelity dumped a lot of shares, and they are responsible for a good chunk of the dump we saw the last 2 days. Here is some guy on YouTube, not a journalist, not anything, matter of fact, did the job for you in the video where I exposed the whole thing for the inside job that it is. I showed you that Fidelity is the largest shareholder in GameStop. Of course they're not going to restrict trades. Of course they want the stock higher so they can dump. They made a killing. We're talking billions of dollars were made for these big, large Wall Street firms in a matter of a couple of weeks. It's the biggest crime in financial markets since 2008. And the retail side voluntarily walked to the slaughter. And here's Mark Cuban bitching and moaning about the SEC and the little guy, that the SEC only enforces the laws against the retail side because we don't have financial ability to fight back, but they don't do anything against the big guy. Who are you talking about, Mark Cuban? Are you talking about your buddy, Elon Musk? Because here is Elon Musk, who's been egging retail investors to join this jihad, this suicidal mission. For what? Just for him to satisfy his ego that a bunch of shorties got hurt because somebody shorted his stocks a while back? This is totally sinister and disgusting. Specifically when you don't put your money where your mouth is and join these retail warriors. Elon Musk said a few days ago, here come the shorty apologists. Give them no respect. Get shorty. And now that retail participants who listen to Elon Musk are getting slaughtered as we speak. Where is Elon Musk? Here he is, off Twitter for a while. What a coward. What a coward this guy is. And here is Chamath after all the pumping. And of course, he's launching this war against short sellers. because he does not want anybody to check and question his scam SPACs. He's launching all of these empty shell companies that produce no value whatsoever. And the only purpose of these companies is to parasite on actual companies. Sometimes these companies are good, sometimes they're not, and they all do it just to profit off the retail trader. SPACs are pretty much guaranteed. Win or lose, the SPAC owners get paid regardless. This guy's the biggest scam artist of them all. And here is Chamath. Close this position out. Along with our investment and our gains, we had profits of 500K. We donated it all to Barstool Fund. The wire just went out. Okay, so you pumped and dumped. What about the retail traders? You egged on to do this mission. Are you going to bail them out now? How about you donate some of that 500K to bail out some of the retail traders you egged on to participate in this suicidal mission? These people are total crooks. And speaking of Barstool, what about Davey Barstool? Davey Barstool also been launching this war, egging retail investors to join in, tweeting diamond hands. And today, here is Davey Barstool. I bought at an absolute high on AMC, Nokia, Naked, and I sold at the exact bottom. I lost 700K, and people are calling me a suit and a pussy. I may be a pussy, but I'm not definitely a suit. But I'm definitely not a suit. Now, at least Davey Barstool put his money where his mouth is, and he joined this war, and he lost money. So at least I have some respect for Davey Barstool, unlike Mark Cuban, Elon Musk, and Chamath. Now, what about the Wolf of Wall Street? I showed you videos where the Wolf of Wall Street a couple of days ago said that the crash in GameStop stock is guaranteed to happen, and retail investors should be really careful and take some chips off the table. A day after that, he produces a video where he's encouraging retail traders to hold and to stick it to the suits, and they're gonna emerge victorious. What are you doing, Jordan? You're making a total ass clown out of yourself. You just said 2 days ago that this thing will end up badly for retail investors. And now you're egging them on to hold and stay in this fight, in a losing fight. What the hell's wrong with you? But this is why they're doing it. And by the way, a lot of other YouTube channels who I have a lot of respect for, who I follow and watch their content on regular basis, they also join the stupidity, calling it a David versus Goliath, and sticking it to the suits and to Wall Street, and encouraging people to participate in this mania. Why are they doing this? Because it is a popular thing. If you make a video talking about how Robinhood cheated everybody and how these traders over at Reddit started a revolution against Wall Street, which is a bullshit narrative, by the way. Wall Street was, for the most side, happy to see GameStop stock going higher. But they kept doing the same pump and the same participation in this stupidity because it is popular. It will get them more views. Will get them more subscribers. They will be able to sell more shit. That's all they care about. And now that the stock is down, all of a sudden they all went silent. Or they're just producing videos saying, oh, they cheated us. Wall Street is gonna win anyways. Robinhood did this and did that. No, you knew from the very beginning that this is wrong, but you chose to exploit the opportunity to benefit yourself. But this channel, from the very beginning, told you that this is bullshit from the very beginning. We're not buying it. We're not buying the David versus Goliath narrative. If you're participating in this, you are participating in a suicidal mission. And the only winner who's going to emerge from all of this, when it's all said and done, is the biggest firms in Wall Street. We don't care about being popular here. Being popular lasts only for a while, but being credible lasts for a lifetime. I'll say it again. Popularity lasts for a while, but credibility lasts forever. Put that on a shirt and wear it. And that is the lesson of the day. And by the way, what about all of these hedge funds who you guys destroyed and you showed the suits? Here are the suits. Steve Cohen, 0.72, raises 1.5 billion. Everything they lost, they made right back. Why? Because they have access to the Federal Reserve's lending facilities, and they can take whatever loans they want, pump the market once again, make profits, pay the loans back, and we're back to even, back to business as normal. The game is rigged and has been rigged for decades. You're not going to undo that via a manufactured short squeeze out of Reddit. Now, let's cover the market's dynamics that we are dealing with right now. We talked about two different portfolios, the Wall Street Bets portfolio, the Sheep's portfolio versus the Suits portfolio, aka the hedge funds portfolio. And as you can see, once again, another day, another win for the Suits. You look at the Sheep's portfolio, AMC down over 40%, GameStop down 60%, Naked Brands down over 35%. These are massive losses. People are getting slaughtered here. Meanwhile, the suits, all what they have done last week is they liquidated their portfolios in the Nasdaq, raised cash, and they were ready to do short covering in where? GameStop and the likes. The brokers colluded to save their asses, because here is something for you. The broker is a middleman between you, the trader, and the clearinghouse. When you buy call options and you score big, the clearinghouse has to pay your broker so your broker can pay you back. Well, now on last Thursday, GameStop surged significantly higher in the morning, over 100%. And those calls that were set to expire the very next day on Friday, the holders of these calls made a killing. And the clearinghouses all of a sudden did not have the money to pay them. In the case of Robinhood is the clearinghouse. They're the broker and the clearinghouse. So they were in deep trouble. Okay, we understand Robinhood ran out of cash. They could not pay the call option holders. We get it. Although they cheated them because the call option holders, they didn't do anything wrong. They were supposed to get paid and they got cheated. Pure and simple. But what about interactive brokers, for example? The law says, and the deal is, if your clearinghouse runs out of cash and they cannot pay the trader, then the broker's neck is on the chopping block, and you as a broker, your obligation is to pay the trader. Interactive brokers had over $9 billion in cash. They could have paid call options traders, but they chose not to because they did not want to pay out of their pockets. They decided to shut down with everybody else and make sure that these call options decline in value or expire worthless, and then they'll reopen trading once again. It is the biggest financial crime since 2008. And now, the hedge funds, they sold the Nasdaq high, they raised a lot of cash. All of a sudden, they don't need that cash again to cover for their shorts at GameStop because they will cover at much lower prices. So what did they do this week? They put the money back in the Nasdaq, buying at cheaper prices and making a killing in the process. What are they going to do next? They'll take some of that cash and cover for their short positions at very, very low prices. So again, I'm not even trusting this rally in the Nasdaq. I'm not trusting the rebound yet. I'm not saying that these cheap portfolio names are going to rally once again. They will get covered at some point, but at very, very low prices. The problem is, what is the next move for the hedge funds and the Wall Street insiders? What are they going to do now that they have pushed the Nasdaq and the SPY and the Dow Jones back where it was trading before this whole thing started? What is the next move? Are they orchestrating another slaughter in the broader market, sucking other retail traders, thinking that the Nasdaq rally is going to go on from here, and then they pull the rug? That is very possible, but we're not going to know until we know. So for now, we remain very vigilant and very careful and be very skeptical about the market moves. You can dance all you want and celebrate that the Nasdaq blasted higher. This guy you're listening to right now is very skeptical. The market is a jungle. Just take a look at what happened to silver. Bumping yesterday, dumping today. And these are all signs and signals that we are coming to an end. When the market becomes this dysfunctional, we are coming to an end. Remember, go back to the year 2000, January and February 2000, or ask anybody who was trading back then. We saw the same mania. Nobody was anticipating whatsoever that the market's going to crash on March 2000 because everything was rallying higher and higher and higher. Nobody saw the end of the cliff, and this is why we remain vigilant, because the market has a lot of problems underneath it all. Moving on to the charts analysis, and let's start with the SPY 15 minutes chart. Here is the problem when we talk about the dysfunctional market and technical problems underneath it all. The S&P 500 managed to gap higher today, overnight pump once again, and the buying program stops where? Lunchtime, 9 o'clock Pacific time, it stops. Retail traders are not there to pick it up. The market trades flat all the way till the end when somebody start dumping, cashing some profits, and that is the story. Are they going to do another overnight pump tomorrow? Who knows? But this is what's driving the market right now. Overnight pumping. Nobody's buying during the session. Add to that, we left the gap from yesterday. We did not fill it. We just gapped above it. So we still have two gaps to cover now underneath where we're trading right now. And we have reached the gap from last week at 383.79. We got very close, but we did not close it, and we started reversing by the end of the day. Matter of fact, the highs of the day were 383.22. So we came a little short here. Is that the end of it? Not at all. They could do another pump tomorrow. But honey baby, this does not look very healthy. All of these gaps will be filled. We're not going to just run gapping overnight all the time without filling most of these gaps. Understand, this is how the market performs technically. What about the daily chart for the continuous contract? Once again, the outflow last week, that money is going back where it was in the market. All in all, we are back where we were trading last week. And what we are looking for right now is the RSI. It is still weakening, and if we don't cross and fix the downward trend by tomorrow or by the end of the week at most, that will be a problem. And if we start to reverse in the RSI without breaking the yellow trend line, the descending line, that would be a very, very ominous signal. And of course, we're eyeing the level of 3,862. Reversing before hitting that level, run for the hills. But reaching and closing above that level will mean that the rally has a lot more juice to it. What about the Qs? 15 minutes perspective. Similar story here. Gapping higher overnight, but during the session, nobody's buying. It goes flat all the way till the end. On the bullish hand, we've managed to recapture the trend line. On the bearish side, you bet that we will go back and refill that gap. It might not happen tomorrow, but it will happen eventually. And we're not talking a year from now, 2 years from now. We're talking days from now. What about the daily chart? For the continuous contract for the Nasdaq, again, I'm highlighting to you that the outflow last week was pretty much fixed by the inflow this week. They took the money out last week, they're putting it back where it was, nothing changed, we're back where we were last week, and we are looking for the level of 13,599. Reversing before reaching that level and closing above it will be an ominous signal. Likewise, take a look at the RSI, a descending line. Reversing before breaking that descending line will be a very ominous signal. I know everybody's having orgasms left and right, but you have to keep your eyes in the big picture. And it's mind-blowing that some traders put on their charting program and they grab a big jar of Vaseline and they are whacking off to the market tick by tick. If the market's going their way, they're having orgasms left and right. If the market's not going their way, they're angry, frustrated, and stressed out. This is not a way to trade at all. At all. You gotta have a little bit of a longer horizon than just tick by tick. At least have a week horizon or so, because all of what we have done is just bringing the money back to the Nasdaq. Nothing has changed whatsoever. I mean, when I said that GameStop is a shorting opportunity of a lifetime, somebody goes in the comments and say, whoa, you said it's a shorting opportunity of a lifetime, but today the stock is higher. And then when I say yesterday that the short squeeze is not over and they're going to cover for their shorts eventually, but at lower prices, somebody messaged me and says, oh, but the stock is down 60% today. You're watching the market tick by tick, day by day. You got to expand your horizon a little more than just tick by tick. Moving on to the IWM 15 minutes chart. And this chart is acting a little better than the SPY and the Qs. Gapping higher, going all the way to fill the gap, filling the gap, and then reversing higher, consolidating in a bull flag formation. From a 15 minutes perspective, the IWM is much healthier than the SPY and the Qs. Let's check on a daily chart and see what's going on here. Once again, nothing changed whatsoever. We're back inside the channel once again, but take a look at the RSI. We have broken the trend. Can we recapture the trend? Yes, we can. But the damage has already been done. This chart is a lot weaker than it used to be a week ago. Just keep that in mind. What about the dollar index, the ABC pattern? Technically, we're done with the ABC pattern. The chart doesn't have to go all the way where I'm drawing the C leg. It can stop right here. It already done the ABC formation. And the current level of resistance is the 91.5. In addition, what are you looking at when we're talking about the chart of the dollar index? Take a look at the RSI. The momentum, the trend is still intact. Breaking that trend to the downside will mean that pretty much the rally here in the dollar index is coming to an end. Moving on to gold. What do we see here in gold? Remember yesterday I said do not trust what's going on with silver and gold. Trust King Dollar. Here it is. Gold having a red day today, struggling to break above 1870. Do not trust or buy gold until the dollar is finished with its move higher. Moving on to silver. Check out what's going on here. Pump and dump. They pumped it yesterday, they're dumping it today. All in all, silver is back where it was trading before the pump, and silver remains bullish from a technical perspective. Until when? Until we go back to the level of 25. Absent of that, it is still bullish, but the pump and dump is over, and this is how criminals get away with their crimes in financial markets. They made a pump over the weekend, they made their profits early in the morning, they started dumping, and that's that. What about the 10-year Treasury yield? On trajectory here, the ABC pattern, we stopped The B-leg stopped at the 1% target, as I predicted. And the question here, where will the C-leg take us? How high are we going to go? And if it is indeed an ABC pattern, then we're going to go higher than 1.2%. And remember, everybody's ignoring the rise in yields right now, but the rise in yields will kill the technology and the growth sector. JP Morgan says the magic point is 1.3. Jeffrey Gundlach says it's 1.5. It doesn't matter, 1.3, 1.5. There is a number on yields that will get the market in panic mode. You're not going to realize it right now. You're going to brush it off. One day you're going to turn on CNBC. The NASDAQ will be down 3-4%. Why is that? Because yields are rising higher. All of a sudden everybody's paying attention to the rise in yields. But you heard it here first. What's going on with the VIX, the volatility index? We went all the way higher, the explosion higher. We did not reach the resistance target of 41. We broke the first support line of 30.5. And now we stopped short of going back all the way to the most important support line of 25. The question is, can the VIX capture the support of 25 and start blasting higher once again? Or was the explosion in the VIX just a one-time thing? Here's what you have to watch out for. I gave you the technicals that you need to watch out for in the Qs, the SPY, etc. But you also need to pay attention to the options market. If we see increasing activities of buying puts in the SPY, the Qs, etc., you will start seeing the move before it happens. If we see the demand on buying protection increasing, specifically for February and March expiration, that would tell you the market insiders know for certain that the market will suffer a correction this month or in March, and they are preparing for it, meaning that the VIX will blast higher. Watching the action in the options market is extremely critical for us to find out where the VIX is going next. What about Apple? The NASDAQ blasted higher today, but Apple was somewhat muted, closing about half a percentage point or so in the upside. And remember this, as Apple goes, so will the market. I'm a little skeptical here in the NASDAQ rebound. Number one, the reason for the rebound is they took the cash out, now they're putting it back in. Nothing changed whatsoever. And who's to say they're not going to take the cash out again to cover for some of their short positions and perhaps raise more cash in anticipation of a correction? Furthermore, if Apple is showing a little bit of weakness here and struggling to recapture 138, that is going to be a problem for the overall market. Watch Apple, it is the leading indicator. For now, the series of higher lows appears to be intact, but we have to defend the level of 131 and we have to recapture the level of 138 as a confirmation that this is yet another, a higher low in the series. What about Tesla? We talked about Tesla yesterday. All the talk about SpaceX will benefit Tesla in the trading session today. Tesla, from a technical perspective, looking a lot bullish than it was yesterday, closing the gap on daily basis, which tells you from a technical perspective alone that Tesla's readying to mark an all-time highs once again. I am still skeptical, however, for the same reasons we discussed during the NASDAQ coverage. They took the money out, they're putting it back in. Nothing changed whatsoever. Tesla's still trading where it was last week. Nothing has changed whatsoever. All in all, Tesla has lost momentum. Take a look at the RSI and the MACD indicator. Does that mean that Tesla's going to crash? No, it's not. Does it mean it's going to rally impulsively higher again? No, it's not. What you have to watch out for is the following. If there is another big rally for Tesla, you will see it in the volume in the options market. The entire rally in Tesla was built via call options buying. When we see the volume going down, forget about another rally in Tesla. But if we see the call options volume picking up tomorrow, that would tell you we're heading to all-time highs in Tesla. Here's the take, however. Somebody asked me a few days ago, do you have any recommendation about a technical analysis book or a course, etc.? It doesn't matter to me. Pick up whatever book you want. Technical analysis, 101, regular book. You don't need to read somebody's biography. Just read the information about technical analysis itself. But here's the problem, and you see it with a lot of YouTube channels. They only do the technical analysis, and they are very brilliant, very good technical analysts. But the technicals is just one cornerstone of many in the market. You have to cover the news. You have to cover macroeconomics. You have to cover the psychology. And the psychology is more important than technicals. The momentum is more important than technicals. Market dynamics are more important than the technicals. So you have to combine all of the information together. And this is why this channel is the most comprehensive coverage of the stock market on YouTube. We cover everything every single day. And by the way, from a technical perspective alone, why do we have to go down to a former support level, a solid support, retested, and then march higher once again. For example, in Tesla's case, suppose you're in an amusement park and the roller coaster goes on for the ride. It comes back and the ride is done. But now the same riders going for a second ride. What is the level of enthusiasm and excitement this time around for the same riders? Not so much. They're not throwing hands, they're not screaming, just like they did during the first ride. And this is why the ride has to come down to a support level, take these people out, some of them, and have new blood, new riders coming in and have the second ride higher so they can throw their hands in the air and scream and have that momentum to push the chart higher. If the ride comes to a support line and there are no new buyers, there are no new bloods joining the ride, it goes lower and lower and lower until there is a level of support where a new blood is going to join. For a chart to be stuck at the highs without going back to revisit support lines and bouncing higher once again, you have to assume that the chart is very vulnerable and it is not healthy, because you're talking about riders who've been in a ride for a while right now and they are exhausted. They have made a lot of profits and they could pull the trigger at any time if the chart does not move higher. For the chart to move higher to new highs and create another rally, you need new blood to join. Point made. Moving on. To conclude this video, what do we have tomorrow in the economic calendar? The main event is the ADP employment report. And this is going to be very, very important for the market. We have the services PMI. Now, we're expecting a bad number in the ADP employment report. If it comes much worse than we expect, I don't think the market's going to react very negatively here, because the market is looking for what? The next round of stimulus and the reopening. We're making good progress here in terms of vaccination and getting closer and closer for reopening. So the market is fixated right now on the main show, the stimulus and reopening. The sideshow of the rebellion and GameStop and all that garbage, that is just a sideshow. The market is not paying attention overall to that kind of events. The market is concentrated on the outcome of what? Fiscal and monetary stimulus, aka the cocaine. This is what the market cares about after all. Now, what about the earnings schedule? Today we heard from Alibaba, Exxon, UPS, Amazon, Google. Amazon and Google had very good earnings. UPS did so too. Electronic Arts, the earnings were good, but the chart was running too high, so you saw the reaction acting negatively after hours, even though the earnings were good. And tomorrow we have Sony. Even though Sony shows up here on Tuesday, I get my information from the NASDAQ. Companies file with the NASDAQ and they give them a specific date. And then they change the date depending on their own different circumstances. I cannot figure this out for you. I'm taking my information from the official NASDAQ website. But Sony is reporting tomorrow. And remember, Sony is one of my top picks for 2021. So I'm waiting for a dip here. I'm hoping the name is going to crash a little bit so we can pick it up, because Sony is doing very, very well, regardless of the weakness from their entertainment segment. And then we have AbbVie, Qualcomm, PayPal, and eBay. Anyways, I apologize in advance if this video is coming a little late. We kept it short and sweet this time around, but we will go back to our normal coverage tomorrow. If you found the information presented in this video helpful, please subscribe, press the like button, the notification button, and follow me on social media.